So this is an example of a particular fund which I have taken into picture. The site is valueresearch.com. This fund is called DSP BlackRock Income Opportunities Fund. This is a pure accrual fund. Now, if we see the technicals, we see at these three technicals mainly. Yield to maturity, what we will refer to as YTM from now, average maturity, and modified duration. What does this mean? Average maturity, so let's say I have a mutual fund and these are the top holdings in the mutual fund. I have taken ILFS Transportation Networks 2019 paper. It's close to about 6%, 4.65% of my total assets. And I have taken a 2019 paper which is maturing in 2019. DLF Emporio is maturing in 2021. Reliance Jio Infocom is maturing in 2020. Prism Cement is maturing in 2019. So if you see, the maturities of all these papers are different. So what we do is we average out the maturity years of these papers and we reach to this particular factor, which is average maturity. So in this particular fund, we have an average maturity of 3.07. That means all the papers will mature in an average of 3.07 years from now. What does yield to maturity means? Yield to maturity means that if I hold this particular fund till the average maturity period, which is 3 years, 3.07 years, I should expect a return close to 9.41% from this fund for sure. This is per annum return. So if I hold it for 3 years, my return is 9.41% on this particular fund for sure. This is the papers that I have. This is provided if I don't get any default risk from this, which I've already covered that, the default risk is eliminated by various factors in my previous video. Now we come to one more technical called modified duration. Modified duration basically tells us the sensitivity of a particular fund towards an interest rate hike or an interest rate drop. So if you see for this particular fund, which is DSP BlackRock Income Opportunities Fund, the modified duration is 2.41. If I see another fund, which is ICICI Prudential long-term fund, this is a pure dynamic bond or an income fund. You see the modified duration going up to about 5.90, and that is because of the Government of India securities that I've added in this fund. So this Government of India securities and this modified duration is what is the differentiating factor between an accrual fund and between an income/dynamic fund. So I'll just explain you very quickly about what modified duration is and how does it impact our returns and how does its sensitivity towards interest rates impact our interests.